Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for November 15, 2018. We're talking gold and oil. What's up with those? What levels to watch? Is this the bounce? And are there any additional downside trades in crude? And what levels are important for gold? We'll start, of course, with crude oil, because it is probably the most interesting in a market at the moment. Given it's fallen from 76 per barrel down to 56, $20, that's more than 20%, and that puts it officially into bear market territory. Before we start talking levels to trade in short term, we'll take a look at the weekly chart. 55 per barrel is going to be a critical support level. It connects the prior highs from 2016 and 2017 at the end, and puts it roughly at where we are now. That is the turning point, the bounce point, and at least for today's session, the rally point. Is this the stopping point for crude oil and the reversal point? That's how we'll frame the question and our individual trades on the intraday level or swing or option positions. Either way, 55 per barrel will be the critical support level, and the next series of trades will be the departure from it. So far, the bullish case on the intraday level, at least, has given rewards for those aggressive traders. But this weekly chart will set the stage for a possible further bounce. Now, the one thing about commodities, as is different than stocks or equities, is that they do have a propensity to trend more or go in the same direction multiple days and multiple weeks in a row. So that is a higher risk and reward for commodities in general over equity futures, ETFs, or individual equities. Crude is just a good example of that. Now we'll drop to the daily chart, and that'll give us a different perspective on the 56-55 level. Crude oil prices are back to where they were at the latter point of 2017, after really breaking this uptrend, 200-day simple moving average, and all the prior lows made so far in 2018. This will it or won't it bounce is how we'll frame. We do have reversal candles and a pierce outside our falling trendline channel. We can update this with our new chart of crude oil. So we need to trade this on the lowest frame possible because in terms of retracements, the bounce could take it to 62, but that's a little bit far away to put on positions. In terms of shorting into the market, this is too late to short. And if you are going to do this, it would be a bullish bounce opportunity if this continues higher, at least to 59, to the upper spot of the trend line. And if it gets above 59 and 60, that could play it up to our moving averages. I would recommend taking this on a lower frame. We'll start down with the 30-minute chart, and we can see again how this trend line, and the hourly chart shows that as well, has maintained the price well until the recent break beneath it. So as we extend our trend line live, we do see a return above the 56 per barrel level, and that is suggestive of a higher bounce. But of course, as the S&P had a level, broke the level, and then potentially will rally again, that's how we'll frame crude oil, with a dominant thesis or short-term support bounce play or thesis. However, the alternate thesis, and yes, crude can continue lower, will trigger beneath 55 per barrel. Keep in mind that is a weekly chart level to reference. So any option trades, USO ETF trades, or related oil or crude oil trades, and of course what my recommendations for intraday futures, that will be your basis for a departure from that level. Now, gold is different. It had a rough 2018, but has held its own in September and to an extent in October. Gold started the year strong above 1340, but then fell all the way beneath 1200. We've seen gold trade in the sideways range between roughly 1190, 1220, and then the midpoint gives it about 1200. That was recently our pivot and reversal point that led to some good bounce plays for aggressive traders. We are back into our support pivot and our reference point at about 1217. It is the 2050 moving average and our price level. So what the next position for gold will be similar. it's going to be either a bearish retracement down away from it to keep this sideways range in motion, or a breakthrough once again, look for higher volume if that happens, above 12.18 and 12.20, and that would set up a very short-term play to 12.40 per ounce. Either way, keep watching these levels. We'll actually pull back to the weekly chart for gold to see that it has been in a multi-year trading range. Low point was about 10.50, high point was 13.75. So this spot here puts us in the middle of those ranges. And of course, in the short-term play, 1200 is our goal or departure spot. Gold is ranging between these levels, and if it starts to break under 1180 and 1175, that puts in motion a sell swing in the future down to about 1125. But until then, continue this on a short-term play. Again, hourly, short-term trades back and forth, or any type of swing trade on the daily chart levels like these, from and away from and to these key pivots. Either way, be safe. Trade these on the short term, swing trades, or option positions. This is Corey Rosenblum with your Theo Nightly video for November 15, 2018.